Hi, welcome. It's Mary Ellen McGonigal, Senior Managing Director of Stocks here at Simpler, with your Weekly Edge show for Saturday, December 11th. This week, as usual, we are going to take a look at some of the more impactful news that drove price action last week. From there, we will go ahead and take a look at the markets. Where did we close the week? We will drill down beyond that because you want to be aware of where that relative outperformance is currently taking place with an eye toward participating or taking advantage of that strength. And then viewer question of the week. And this has everything to do with inflation and areas of the market that are historically positioned to do well during high inflationary periods. So let's get started. As it relates to news last week, we did see the volatility index drop. This is taking us down from that prior week spike due to Omicron fears. And as those fears receded, we did see volatility decline so that it closed the week at that 18.6 level, which is essentially telling us that there is more in the way of stability coming into the markets. Inflation news last week, a couple of items. We did see core inflation reported on Friday, and it hit 8.5%. This is a 40-year high in inflation, so we will get more into those areas that can withstand high inflation. And then also note that despite this high number, it was in line with what investors were anticipating, so the Friday reaction was not that bad. Also, earlier in the week, we did see job openings arise. We are amid one of the biggest worker shortages in decades, and this is another pressure on inflation because in turn we will see wage increasing, and that in turn will be passed on to higher prices to consumers and hence inflation. So as we move on, let's take a look at where did the markets close this week. We'll begin by taking a daily look at the S&P 500, and what I like to focus on is the position of this index relative to its simple moving averages. And during this pullback period here late last month into December, we wanted to make sure that it held support at this red 50-day simple moving average, which we did. And then this week we constructively traded and moved above these shorter term 10 and 21-day simple moving averages. We now have these outside momentum indicators, both the RSI and stochastics, up here in positive territory. And while that is constructive, there are still areas that are not on firmer footing. There's a little bit more I'd like to see before going all in, but certainly looking good going into next week. Let's take a quick look at the Nasdaq. This tech-heavy higher growth index also did rally this week. It was up a little less than the S&P, up 3.5%, and we can see it is finding a bit of upside resistance here at this 21-day simple moving average. Your outside momentum indicators also in positive territory, but not really powerfully heading higher. So as we move forward, let's go ahead and take a look at where the relative outperformance is currently taking place. So here is a 2-month daily price chart of the 11 sectors in the S&P 500. I've gone ahead and added this RSI indicator and then sorted them in descending order. I want to see up this quartile here where that strength is currently taking place and take a look. Consumer staples, and this is a carry on to my show last week where I highlighted a move into these staples. The industry group was up this week 3.7% in line with the broader markets. A lot of this having to do with the higher yielding names within the S&P 500, but even more importantly is ability for these staple stocks to increase their pricing in the face of inflation. Consumers still need these products despite the higher prices, so hence the uptick here in consumer staples. From here, we can take a look at technology, the top performer last week. It was up 6%. Note this gap up as the index hit a new high in price. And while this move is very encouraging, I will tell you that two of its top holdings, Apple and Microsoft, had super outperformance. Apple up 10%, Microsoft up 6%. However, there was a pocket of strength as well that I will share with you in the next segment. And then also REIT stocks. Real estate stocks are a very good hedge against inflation. Not a vibrant big move, but certainly to the upside here. In addition to offering a higher yield, which is positive in the face of inflation, also a lot of these REIT companies have clauses that allow them to raise their rents during periods of inflation. So from here, we of course want to be aware of where those weaker areas are. We can see financials downtrending, trying to reverse that, but still finding resistance at that 50-day. Bank stocks up only 1.8%. So from here, let's go ahead and drill down. We want to also take a look at some of the underlying areas within these sectors. Again, that RSI descending, sorted strength to weakness. This is one of the leadership areas within technology, which was the top performer. Although semis were up only about 2.8%, they really held up well while the rest of the market deteriorated amid those COVID fears. So it is viewed as a leadership group. But let's take a look at another area within technology that did outperform, not quite ready for prime time yet, but this is software stocks. They were up 3.8% last week. This waterfall shed here was not only COVID fear related, but more importantly, as inflation rises, software stocks generally will not fare well simply because their growth prospects, the future value of their earnings, will decline. So we're keeping an eye out on that group. Once it gets back on firmer footing, it really can be a big outperformer. And then from here, making sure that you're not in certainly biotech stocks. They are continuing to deteriorate, down almost 1% again last week. And so from here, let's go ahead and take a look at some stocks that could be ideal candidates as it relates to this buffer against high inflation that is very much in place. So I'm going to share with you a technology stock that is also a high yielder. This is Cisco. It offers a 2.5% yield. And while tech stocks generally are not great buffers against inflation, there are a handful of higher yielding names that are really doing quite well, breaking out of bases, forming the right side of bases, hitting new highs. Cisco is one of them. The company did report earnings in late November. At that time, they reported a record high in product orders going back 10 years. The stock since then has been in an uptrend. From my work, I like to see when that company in stock breaks out of a base and combining that with an RSI that's positive as well as a MACD. From here, let's take a look at a stock that's in the energy group. A couple of factors here. Number one, energy stocks are renowned for being a good hedge against inflation. We're looking at BKR, Baker Hughes. There is another factor why this particular stock would be of interest to me, and that is because we did see a pickup in natural gas prices because there's an anticipation of a cold winter season coming upon us. So let's take a look at the chart. BKR is a 2.8% yielder, and they do provide technology and products not only to the oil industry but also to the natural gas industry. What I'm looking at here is a price break back above this 50-day simple moving average that took place this week. In line with that, we did see these outside momentum indicators also turn positive. We had this MACD bullish crossover back here earlier, and then later in the week it traded above this net neutral zero, which is constructive, and then the RSI trending upward and also in positive territory. I mentioned to you that REIT stocks do well in periods of high inflation. Let's take a look at INVH. This is a REIT that provides single-family homes. It's a 1.8% yielder, but we can see that it is breaking out to a new high in price. Housing stocks have really been on the move, all about earnings. Home demand remains quite high, and this particular company does lease single-family homes. We can see amid this base breakout, the RSI is positive. We did have that nice MACD crossover, and that momentum indicator is also trending higher. For those of you that haven't already, I urge you to use that link below. Take a trial of my MEM Edge report. This Sunday, I will get more into this rotation that is taking place and highlight additional names, and also alert you to when their bullishness has resumed in these higher growth areas such as software. Have a great weekend, and I will see you next Saturday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.